Welcome back to the Deep Dive. Today we are unpacking what might be one of the most significant pivots in modern industrial history. And I really don't use that phrase lightly.
No, it's a big one.
We're talking about the end of an era for the electric car as we know it, and the beginning of something that sounds like it was ripped right out of a sci-fi novel.
It really does. I mean, if you thought Tesla was just a car company, their last quarterly earnings call for 2025 just completely shattered that illusion.
Exactly. So today we're looking at the Q4 2025 earnings transcript, the investor decks, and all the financial reporting around it. And the real story here isn't just about the numbers. It's about identity.
It's a fundamental rewrite of the company's DNA.
Right. We're talking about the official death of the Model S and Model X, a $20 billion spending spree, and a rebrand to physical AI.
It's a classic burn the ships moment, truly.
It is. But before we get into the robots and the billions and the massive risks involved, we have to do our housekeeping.
Right. The mandatory disclaimer. Everything we discuss here regarding information and analysis is just to help everyone better understand the market. It is not investment advice.
And investment involves risk. So please do your homework or consult a professional financial advisor before entering the market.
Okay, let's get into it.
Okay, so let's start with that phrase he used.
Yep.
Burn the ships. It feels so appropriate because the call started with Elon Musk announcing an honorable discharge for the Model S and Model X.
Which is huge. I mean, these are the cars that put Tesla on the map. The Model S proved an EV could be desirable, and the X proved it could be a family car.
And now they're just gone.
Winding down production next quarter, Musk was very clear, if you want one, you have to order it now.
That feels incredibly aggressive, though. Usually car companies phase things out slowly. They don't just kill their halo cars overnight. What's the rush?
They need the room. It's a spatial problem as much as a strategic one.
Well,
The factory space in Fremont, California that currently builds those cars is going to be completely gutted and converted. And they're not putting in a new car line. They're putting in a production line for Optimus.
the humanoid robot.
The humanoid robot. And the goal, he stated, is to have a line capable of producing 1 million robots per year. In that one space.
Wait, hold on. 1 million robots. That sounds astronomical.
It does. And it really highlights the core theme here. The shift from Tesla, the automaker, to Tesla, the physical AI company.
But before we get lost in the robot dreams, we have to ground this in the financial reality that made this pivot so urgent. Because the numbers for 2025 were complicated.
Complicated is a very polite way to put it.
I was looking at the earnings report,
Yeah.
and for the first time on record, Tesla's annual revenue actually dropped.
That's right. Down 3% to about $94.8 billion. That whole infinite growth story, it really hit a wall in 2025.
And the profit took an even bigger hit.
Much bigger. If you look at Q4 specifically, net income plunged 61% compared to the year before.
Okay, so for everyone listening, can we just clarify the difference there? Revenue versus net income.
Sure. Think of revenue as all the money coming in the door from selling stuff. That dropped a little bit, 3%. But net income is your profit. It's what's left after you pay for all your parts, your salaries, your factories.
And that profit dropped by 61%.
61%. It's a massive deterioration in profitability.
So they're making a bit less money, but keeping way less of it. Is this just about the EV market slowing down?
It's more specific than that. It's a mix of an aging lineup and just brutal competition. The Model 3 and Y haven't had a major refresh in years.
And meanwhile, you have BYD and all the European automakers flooding the market.
Exactly. They're eating into Tesla's market share, which forces Tesla to cut prices, and that just crushes your profit margin.
Right, so fewer cars sold at lower prices means less profit. But the expense sheet showed the opposite trend. Operating expenses went through the roof.
Up 39%. So think about that. Revenue is down, but spending is up almost 40%. In a normal business, that's a 5-alarm fire.
You'd expect them to tighten their belts and not spend like crazy.
But they aren't spending it on, Super Bowl ads. They are pouring it into R&D, and specifically into compute. That 39% jump is billions going to AI training clusters and robotics.
So they're sacrificing today's profit for tomorrow's infrastructure.
It's a painful transition. Musk himself called 2026 a build year. It's going to be expensive. But there was one bright spot in the financials we should mention.
The energy division.
Spot on. While cars struggled, the energy side, the megapacks, the batteries, solar, it's booming. Revenue up 27% in 2025, a record deployment in Q4.
For years, that side of the business felt like a hobby.
Not anymore. It's a legitimate industrial backbone. It proves they're becoming an energy and infrastructure company, not just a car company.
Okay, I want to circle back to the robots. You said they're killing the Model S and X, which are proven moneymakers, to build Optimus. But is Optimus, is it ready?
That's the multi-billion-dollar question, isn't it? Musk admitted on the call it's still in early R&D. It's not doing any real work in the factories yet.
So it's not actually building cars or anything?
Not yet. He used this great analogy. He said a robot without the right AI brain is like the Tin Man from The Wizard of Oz. It would just sit there.
So let me get this straight. They are clearing out a factory that makes $100,000 cars that people buy today to build a production line for a Tin Man that doesn't have a brain yet.
In the short term, yes, it is an incredibly high-risk maneuver. They are betting that by the time the production line is built, the software will be ready to catch up with the body.
It's like just-in-time manufacturing for invention itself.
Precisely. And speaking of brains, let's talk about the cars that do have brains, the autonomy piece, because there's some pretty wild news from Texas.
Right, the unsupervised milestone. Tesla is now running rides in Austin with no human safety monitor.
And no chase car following behind.
So it's just an empty car picking people up? We've heard about full self-driving for years, but there was always a person in the driver's seat just in case.
And now they're gone. In Austin, for these specific rides, yes. And that's a critical step. If you have a safety driver, it's still R&D. When you take the driver out, it becomes a product.
And they're not just staying in Austin.
No, the investor deck laid out a really aggressive expansion plan for the first half of 2026. Dallas, Houston, Phoenix, Miami, a bunch of cities in Florida, Las Vegas.
Wow, they're scaling fast. And this all ties into the new vehicle they teased, the Cybercab.
Yes, production starts in 2026. This vehicle is designed purely for that autonomous network. 2 seats, no steering wheel, no pedals.
No steering wheel at all. That really is committing to the technology. You can't even take over manually.
There is no manual mode.
Yeah.
The entire design is optimized for one thing, cost per mile. They want it to be cheaper than taking the bus.
Which changes everything about public transport.
And it changes Tesla's business model. This is the big shift to what's called transportation as a service, or TA.
Can you break down TES for us?
Sure. It's like the difference between buying a DVD and subscribing to Netflix. The old model is selling you one car. TAS is selling you the ride over and over again. It moves them from manufacturing to a service business with much higher profit margins.
And FSD is now subscription only, right? You can't buy it up front anymore.
Exactly. It becomes a recurring revenue stream. And Musk mentioned that Airbnb concept again, the idea that you can add your personal Tesla to the fleet when you aren't using it. Your car goes out and earns money for you.
That sounds great, but it all hinges on regulators being okay with this.
That's the biggest if in the entire plan. But Tesla is betting the farm that the data will prove it's safer.
Okay, let's talk about the price tag for all this. You said expenses were up, but the forward-looking numbers are eye-watering. They're planning to spend over $20 billion in 2026.
That's the CapEx, yeah. Capital expenditures, $20 billion in 1 year.
And for those of us who aren't accountants, what's CapEx?
Think of it like this. Operating expenses are your daily groceries. CapEx is when you renovate the entire kitchen. It's money you spend on buildings, factories, machines, investments in your future capacity.
So where does $20 billion go?
Into infrastructure. 6 new factories or production lines. But a huge chunk is for AI compute clusters and something Musk is calling the Tesla Terafab.
Terafab. That sounds like something out of a comic book.
Well, a fab is just a fabrication plant for computer chips. Usually, a company like Tesla designs its chips and then pays someone like TSMC in Taiwan to actually make them.
But Musk wants to build his own.
His own massive chip factory, right here in the USA.
Why? Is it just about control?
He says it's about paranoia. He specifically cited geopolitical risk. He's worried that if something happens in Asia, the supply of advanced chips gets cut off. And if you're a physical AI company, no chips means you're out of business.
But building chips is notoriously difficult, right? Even Intel struggles.
It's incredibly hard. Analysts are very skeptical. But Musk's argument is that in a few years, the bottleneck for their growth won't be car batteries, it will be chip supply. He's trying to solve a problem that hasn't happened yet.
And this ties into the XAI connection. Tesla is investing $2 billion into XAI, Musk's other AI company.
Right. It's a bit confusing, but the argument is that it creates a kind of ecosystem. XAI develops the big AI models like Grok. And Tesla provides the hardware know-how and the megapack batteries to power their data centers.
So it's a flywheel. XAI software makes Optimus smarter, and Tesla hardware powers XAI's brain.
That's the idea. It blurs the lines between his companies, which some investors don't love, but from a tech standpoint, it makes some sense.
So, death of the old cars, birth of the robot, an autonomous taxi network, and building their own chips.
What is the end game here? Musk changed the mission statement, didn't he?
He did. The new mission is Amazing Abundance.
Amazing abundance. That sounds a little vague. It's philosophical. His view is that if you have millions of robots doing labor for pennies worth of electricity, the cost of almost all goods and services plummets.
Right. If a robot can build a house or farm your food.
The economy changes. He talks about a future of universal high income.
Which is different from universal basic income, UBI.
Yes, and the distinction matters to him. Basic income is a safety net. High income implies that the whole economic pie gets so much bigger because of robot labor that everyone has access to a high level of resources. It's a post-scarcity vision.
That's a beautiful picture, but it feels so far away when you're looking at a quarterly report where profit is down 61%.
And that is the tension. That's the entire story of this call. You have the Tesla of yesterday, the car company, which is hurting, and you have the Tesla of tomorrow, the AI company, which is just consuming billions of dollars on a promise.
So 2026 is the bridge between those two.
It's the bridge, and it could be a shaky one. Revenue might be flat, spending will be sky high. Wall Street hates that combination. But Musk is asking them to look past this valley to the mountain on the other side.
It's a huge test of faith for investors.
It is. But if you look at the S-curve of innovation, we're at the very bottom of this new AI and robotics curve. It looks slow now, but exponential growth, when it happens, happens fast.
So let's bring this all together. What are the key takeaways from this deep dive?
Okay. Number one, the pivot. Tesla is retiring the Model S and X to go all in on the Optimus robot.
2, the financials are hurting in the short term. Revenue is down, profit is plunged, mostly because of massive R&D spending.
3, autonomy is getting real. They're launching unsupervised rides and moving to a subscription model for FSD.
4, infrastructure. That $20 billion spend is for new factories, AI, and their own domestic chip plant.
And finally, 5. The goal is this grand vision of abundance driven by robot labor.
It's a massive gamble on a massive future. I'm just left wondering, are we ready for a world where your car drives itself to work to earn money for you while a robot is building the next one?
It's a question we're going to have to answer a lot sooner than we think.
Absolutely. Well, that's all the time we have for this deep dive into Tesla's 2026 pivot.
Thanks for listening.
Hey, yay!